Good morning, everybody, and this is your S&P 500 setups for today. So I did get the non-farm payrolls out, and a bit of confusion, to be honest. So two ways of looking at this again this morning, and the first way, which would be the bullish outlook, is that we have a channel here. Oops, sorry, not that one. We have a fairly well-defined channel. We did step out of it, what was that, going into the close of Thursday, but we're back on the channel. So I think you might as well just assume that as a channel. Could be a bull flag, so that's one thing you need to pay attention to from a bullish perspective. And then from a bearish perspective is we have a lower low here, and then we have come back into the zone to test the zone, and the zone is 52.20 and 52.12. So when we drill down through the time frames, you're going to see a pretty big seesaw of what's actually going on. So Thursday, big down, and then we had non-farm payrolls, which was a little bit more than what was expected, and then big move to the upside. So what you need to do now is just look for the structure. This becomes fairly simple, to be honest, and let's leave that. So this is the zone of support that we have, which is between 51.96 and 51.85. You can run that off to 5200, and you can see price is just hovering at 5200 at the moment. When we get down to the hour, you're going to see 5200 has its own set of challenges. So we're just going to adjust that a little bit up. So that's 51.98, and then take this daily swing low here as our next level at 51.89. So going nowhere, non-farm payrolls comes out, and then a massive move off. I mean, that's just well over 1% when you bring the tail into the picture. But for me, big down, big up. We're in amongst moving averages here on the hour. We do have a crossover. Oscillator is not giving us any indication. If you draw a diagonal line along the top and one along the bottom, you have a triangle. I am of the opinion we are still very confused. So you want to be looking for solid structure before jumping in. So for me, longs only come into play once we get above 52.20 and we pull back and come and test that. Then I'd be looking at longs. At the moment, we should be looking for longs if you look at the moving averages here on the 15-minute, and oscillator starting to move to the downside, but I definitely don't want to be jumping in when we're in amongst the moving averages here. So if we start dropping, and it's going to be, let's just take the bottom of the zone to be safe. So 51.89, you drop below that, you come back and you reject anything in this zone. You'll see all these fractal tails here. These two will come into play. Definitely would be something to be looking out for. So a break and a retest of 51.90 and 5200, that would give us the opportunity to the downside. So 5200 is our line in the sand. If we get moving to the upside, you want to see a break of the structure that I've given you. You want to see a pullback onto it and then start moving again. That's your long. Your short is the reverse when you've got this zone at 5200 as well. So break below, come back and reject it. Should reject the moving averages at the same time in the 50-minute, and then you get to move to the downside. So can go either way. If you look at the moving averages here on the 3-hour, we are below the faster moving averages, but for all intents and purposes, we are above and below the moving averages the whole of last week. So that's just a sign of extreme confusion. So cautious, or caution should I say, is the order of the day. Be very careful of just jumping in short here and assuming it's going to continue, and also be very cautious of just assuming it's going to continue to the upside. So wait for the signals. You want to wait for the structure breaks of those two zones I've given you, and you want to see the retest before you get too carried away. Anyway, that's kind of my view for today. I hope it helps, and we will catch up with you tomorrow morning. Cheers for now.